So we are sitting on the 200 SMA multiple tests. So that's why you got the flush in the morning, but see like how the market is starting to rebound a little bit is because we've done a two tapper on support and also the 200-day moving average. And that's happening on the SPY. And you can see it's happened on the Qs. That's why you got this reversal here. Very important, like when you're looking to shorts things and when you're trying to time your trades, right? You're always aligning on multiple time frames. The market was able to flush in the morning because the price action has been very nasty of the last couple of weeks. But once it gets into the 200, right, like you're going to start, you have to start looking for signs of a potential reversal. You have no, you can't short here. So like what happens is like here, when you get that, right, everything will look like a bear flag. But that bear flag can't work because what? The market, the big picture is showing the market's got to rip now or have a small bounce. And then, like you'll get a dead cat bounce and then you kind of see like what ends up happening. You may still break lows or you may build and, go higher, but the proper play is to try to, build and, get something going. You're kind of starting to see a little bit of a trend emerging. Now, the short-term price action has been nasty. So like, is the market going to finish up like 2% or 3% like the big updates that we were getting a month ago when we were getting these huge days? No, like look at how small the range is here. Look how big the range is here. So when you're trading, there's times to lay the nuts on and go for those big moves because look at the range here, but look how small the candles are here, right? So when you have profits and things like that, you have to really protect them because like see these filled candles here, that means market reversals, right? When you have filled candles, you get market reversal, you can get wicks, right? See wicks, right? Up and down on the indexes. Those are also, indication of chop and market reversal. But the big thing is like, if you just are looking at the size of the candle, then you can see here, right? Like the ATR in the market has, gone from about $7, to $5 just, in the last, so long. And it doesn't matter really what type of ATR you're looking at here, but you can see here, if you do like a 5-day ATR, it went from, we had 874, right? 874 to 478. So just a huge decrease in range. And you can see that just by judging by the candle. So there's a time to shred. And then there's a time where like, hey, if you hit your daily goal fast, because the thing is you will still get action in the mornings, the first hour, even when the market's choppy or when the market is showing less range, you will still get some nice shreds at the open. You just may not get a lot after that. Beyond that, there is earnings season and stuff like that too. So you're getting a lot of shreds, just on earnings plays and stuff like that. And those will move like a little bit more independent to what's happening in the market. So there's tons of stuff to still like make money on, but you just have to be careful. Like it's not, you can make money in all markets. It's more about how easy it is to make money, right? You can make money in any market. It's just how easy it is to make money. In the market when it's got more range and when the market is trending up its MAs or down its MAs, you have more big trend days where you can trade throughout the day. You can hold overnight. You can go for longer duration and longer magnitude plays in this flat environment as we're just kind of really rip and ride, slip and slide on the 200 SMA. These are very, very short trades because you just have that location in the general market. So let's take a look at the first trades of the day. Let's take a look at the first trades of the day. So, we didn't go crazy today, but still it was just a good old fashioned, It was a good old fashioned, nice, shredder. So if we're looking here, like first shorts a day, NVDA, Tesla, so on and so forth. We really took NVIDIA and Tesla a few times. So, and then we just kind of kept hammering them. As you get a trend on a particular time frame, you want to keep hammering them, especially if you have like a thesis on the daily, You have a thesis on the daily. So two different aspects of this. So first of all, NVIDIA had an offering yesterday and you got this big flush into the close, all right? Now, beyond that, you have this gap to fill. So if you look here, and this is a 30-minute chart, So this was the earnings gap, all right? This was the earnings gap. So you have this spot here like 230, and that gap has probably got to fill. Why does that gap have to fill? Well, if we look at this particular earnings season, there have been a lot of one-day runs for glory, meaning like a lot of stocks had their earnings out and they were well received that particular day, but then that was it, right? They didn't really follow through. So this play out has been happening a lot. So this is right, Roku. See this gap up here, right? It got up to 75, and then it's just been filling back and filling this gap, right? And so it's come all the way back. You know, if you look at Twilio, right? This gap was on 66, it gets to 80, and then you come back and you refill that thing the whole way. So you have, right, you're not holding those breakout bars, and so the gaps are filling. If you look at Palantir, right, and obviously Palantir is a big turn, but you can see here this thing was $7, gets to $10, and it has this huge, right, 20% kind of moves, and theoretically, like especially on this kind of volume, that should be bullish, and that should be a bottoming type of signal, but that the follow through just never came. Theoretically, that should be a bottoming type of signal, especially when you're so far up the highs and you get these big bases. But we did not get the follow through, right? The first dip is always important. Does the first dip hold or not? And so you can see here, we're like down like 9 days in a row. This is nasty. So, you know, the theory is, right? So now you have this NVDA and why we want to short it in the morning. None of these gaps have filled, all right? Then you get secondary spot of like this big kind of fade into the close. So what we want to be doing is kind of like twofold on this, right? So I have this kind of level already drawn out, and as soon as like this stock, right, just you can see like right off the bat, this is a simple green to red move, and this is kind of how you want to scale in and out of these kind of trades, right? So this is a simple green to red move. So the stock opens up, right? You get to about 262, 232, 60s, and it was me entering around 232s in the pre-market. And then, right, you get the rub, right? So as soon as you go, right, green to red, and you break under this, you know, under this previous candle, right, the previous day's low, I want to take this. So I ended up close to what, 230, 231.70, give or take. And then what we want to be doing is, this is how you kind of want to trade around it. We have the bottom of the breakout bar here where the gap fill starts, right? So we want to like kind of cover off into this because this is the first test of it. So a lot of times people will be shorting into this 230 because that's the level. But if you just trade around levels, you'll never make money because levels are just levels. You know, they have an order of importance in terms of when they're going to break down and when they're going to hold. So the first test of the level is always probably going to bounce. And so like you want to cover off into this. So, you know, we ended up covering off, right? 2:0, 2:31, 2:30, 37. So like I'm covering off into this, and I always keep a couple for lotto. And the plan of how you kind of scale around these things is if you do a fake red to green, right? That's been the setup this whole bear market, fake red to green. So you get the pop into the red to green spot. That's a spot where you can scale in, or you can wait for the ORB, right? So like I cover up most of this into this. We always keep a couple for fun. And then like as it starts to meander around, right, and you start to see an ORB. So for an ORB, you need 3 candles sideways movement, right? Very, very simple. So like as this thing starts to round and round and round and round and round and round and round, right? Now I'm coming back into the 230s. I got 230. And I was a little bit low. I should have got it probably a little bit more here. I ended up with 230, 20s. And then, right, we're playing for the ORB. Now, this is an important lesson, especially on the location of stops. So you can see here, like it tested down to 229.84, and then immediately like spiked up to 231. You got to be careful on micromanaging your stop losses and being too tight on things, like having that fear of loss, because you know, a lot of times people will see this, like it doesn't hold, and then it goes into the VWAP and you're like, ah, shit, like I'm not, you know, like it's reversing. And it'll just tap into the VWAP and then get yanked immediately. And I made this mistake so many times in my career of just being too tight on the stop loss, and then crap, like you're out of the trade and you got to chase it back down. So you got, you know, the stop loss on this type of trade has to be above the VWAP, and then you want to give it. So the ATR, the 5-minute ATR is 79 cents. You want to give it like a half candle's worth of room. So about 30, 40 cents on top of that, so that you can handle the fluctuations of how this thing starts to go. And then now you can see, right, like this thing just starts to bust loose. And really now you're off to the shredder. And this is like your classic ORB. You have an ORB pattern, but then you have the gap fill level. They're all at the same spot. So what you have there is a confluence. You have a confluence of different things that are happening here. So that becomes really important. Like as you're going through this, like making sure if you got multiple pieces of evidence in your favor, then you got to be a little bit careful on this. And you want to kind of go for a little bit more glory. So as this thing comes in, 230, right? You got 230s. Now you want to start covering off into this, like always into the flushes, right? So as you start popping down, like every $1, $1.50, take a few off the table. And, you know, I ended up covering into the, what we got 227. I got 227.40s, covered into 227.40s. I could have held for probably a little bit more, but the big hairy Indian butt of all this is like we're always into the looking for the meat of the move, right? So we're always looking for the meat of the move. So when we think about meat of the move, it's not can I hold for the whole move? It's how much can I get in the shortest amount of time, right? So like if I can get $3 in 10 minutes or $5 in 2 hours, right? You always go for the shorter period because you want to have your money moving around, and it's about velocity of movement becomes really, really important as you're going through this. So now you start to push this thing back down. You want to kind of cover off into this. I think that becomes really, really important. Now you can start to see, right? Like this thing starting to fart around a little bit because the market itself is at the 200-day moving average. Now, as we're kind of doing this, right, we took a few trades in Tesla. So these are the two main trades that we took today. And don't worry about all these lines, right? It looks like I got a giant dick fetish here. This is the most simple trade that you can do. We took this thing right off at the open, right? This is right off at the open. So a couple things. You have Investors Day today at 6 p.m. So there's going to be some fluctuation into this thing. But beyond that, look, no hot charts have been holding up in this market on the tech side. Sure on like some of the other things, but not on the tech side. So when this thing gapped up here, right, and you spotted up to 207.30, as soon as you busted green to red, like you got to get out, you know, you got to short this piggy and go for gold. Like you don't need to be trying to long this thing, you know, just because, you know, it's holding up well doesn't mean anything. Okay. We want to be shorting strength, and you want to be shorting good looking charts in this market because we're in bear market type of trading, at least the last, right, you know, couple weeks. So you spike up, you go green to red, and then it's the same thing. This is the opening range plays means you scaling out very fast. So like I want to kind of cover off into this every $1 or so. So I covered off some at 204, then some at 203s, and then the last of it at 202.30s. And the reason I do that, even though it's going to go lower, is because this is a green to red trade is meant to be a scalp. So like you're not supposed to hold it for long periods of time. What we want to be doing is like as you start to get secondary setups, right, you can add into this. So like you can see here, like, you know, as we started to ORB into this, right, and you can see what you need 3 tests of kind of that range, minimum 3 candles, and then it'll help when the EMAs come back over it. And now you've got yourself like a really, man, you got yourself a really easy kind of trade here. So like as this thing busted down, right, I'm re-shorting this thing, and I got 202.15 on this. So a little bit before the breakdown spot, and then it's just a matter of flush city, right? So you flush down, and I'm just covering down into this like every $1, $2. So I took some up at 201.04, 199, and then 198s, you know, into the rest of this. And that's how it's supposed to be. That's a 3 candle pattern. So how long are you supposed to really hold it? Too many times people make the mistake of like, hey, I got to hold this thing for hours because, right, we're greedy bastards. But the thing is, if you have a 3 candle pattern, how long are you really going to hold it? The longer the pattern, the longer the hold times are typically, you know, so just kind of be mindful of that. And then, you know, we did take one more shot into this thing, right, as it kind of broke into the VWAP here. I can re-short that, especially if it's post 10:30, and then you want to be careful, like you just want to play this thing back down into the end of the day. So, you know, nothing too crazy here. This is what the market's giving us right now. is like a handful of good trades a day because the range is so tight right now, right? When the ATRs are bigger and you're trading up the MAs, that's when you lay it on thick and go for glory. But when you are sideways and the MAs are sideways, then there's no glory. You're going straight for income type of trades, and you're just stacking them using a handful of really liquid names with bigger ATRs, because everything else is going to be, everything else is going to be a little bit shady. Now they're having some good PR plays out too. So, like FSLR, Duolingo, every day there's been some, follow through on some of these PR plays. So make sure you're doing your gapper scans and stuff like that, beyond your bread and butter kind of tech stocks that you may trade up or down, really trading like earnings and PRs. This should be a solid foundational type of setup for what you guys do. So it's time for me to get out of here, but you know what we got to do. I'll see everybody in the manana.